So we were able to push down these threats from the tariff for 30 days until we figure out how are we going to address this fentanyl and illegal border crossing issue. But one thing is for sure, that these trade wars are brutal for global economy, and it's also brutal for global forex exchange market. We saw Canadian dollar was tanking against USD, and when that happens, it's going to raise our purchasing power. Okay, so we need to understand the future implications of these trade wars and how this is going to impact our currency. And if that happens, how are we going to protect against any of these FX risk going forward? So let's get into this. Although I'm not a fan of bankers or central bankers, but I was watching an interview of Stephen Poloz, the former Bank of Canada's chair, and he mentioned that the Canadian economy is in very weak shape, and we are literally at the bottom. We are trying to navigate through different challenges and bring this economy back on track, and we just got a massive blow from US to put 25% tariff on our exports. So definitely our economy is not good. It doesn't have strength to absorb the economic shocks coming from these tariffs, and our retaliatory tariff is going to even make things worse. So whatever happens, I think we need to be cognizant of that, how this is going to play out in the economy and how this is going to play out for currency. Okay, we saw the Canadian dollar was tanking against USD. And the problem with all of us who are not US resident is our purchasing power is tied with a falling currency. Whether you are living in Canada, UK, Europe, Australia, even in China or India, your currency is getting weaker against USD. The dollar right now is at 108 on DXY. So DXY is an index where we measure dollars performance against 5 or 6 major currencies. Right now it is climbing up, and if it gets higher and higher and higher, this is going to cause a lot of trouble for the global economy, because the global players are not going to keep up with the FX risk that they're taking, because the debt that they have is denominated in dollar and the commodities that they buy are settled in US dollar. So what we should do when it comes to investing, staying informed is everything. That's why I've been diving into Momo. It's got some tools that are pretty useful for navigating today's market. For example, Momo gives you free access to real-time level 2 market data, advanced charting tools, and professional grade research. The kind of stuff that you usually pay extra for on another platforms like Questrade. And let's not forget the low FX fees. If you are trading in the US stocks, like myself, I don't trade TSX. Those savings can really add up over time. Pair that with the insight that you're getting, it's a game changer for making informed decisions. Plus, while you're waiting for the right market moves, your idle cash earns a solid 6% annual return through their Cash Plus feature. That's a nice bonus. So whether you're trading actively or just keeping an eye on the market trends, Momo is definitely worth a closer look. So you can start investing today by clicking on my referral link, which will give you $50 free credit to start with. Thank you, Momo, for sponsoring this video. Nothing from this content should be deemed as a financial advice. Please consider all the risks associated with the investing. Terms and conditions apply. So whether these trade wars are going to continue or not, the risk with regards to FX is going to stay, and the future outlook for global economy is not great, which means the global economy is going to further struggle, and because of that, the currencies of those countries will also going to struggle against USD. So what we should do is to protect against any of these downside risks. So if I know that Canadian economy is going through tough time, which means the currency is going to stay weaker against USD, I will try to invest my money into assets and commodities which are denominated in US dollar. For example, I will buy US stocks, not Canadian stocks. I will buy commodities which are priced in US dollar, like oil, gold, silver, uranium, and then Bitcoin, because Bitcoin is also a commodity which is independent from any country's influence. It's not governed by any regulatory body. It's a network-based commodity priced in US dollar. So anything that is going to be priced in US dollar, for us, it's better than investing into our local markets. So the TXS can go higher, but if the Canadian dollar is going to be weaker against USD, it's not taking me anywhere. So we're going to make sure that our investment going forward has to be in a winning currency and in an asset that is going to appreciate over time. Not every stock is going to appreciate, not every commodity is going to appreciate, because it depends upon the cycle. Okay, but I would definitely invest into technology stocks, gold, Bitcoin, and some commodities like uranium, because we need nuclear power to sustain the power-hungry AI data centers that is going to be built over the next 5 years. And this is applicable for everyone who is not US resident. If you are in UK, Europe, Australia, China, Japan, India, Pakistan, all of these countries have the similar challenges with regards to the FX risk, and their currencies are going to struggle against USD. And so if you want to protect your purchasing power, you're going to make sure that your purchasing power is stored in an asset that is going to appreciate over time and is going to be denominated in a winning currency. And of course, the real estate is going to be in the local market and will be denominated in your local currency. But anything with regards to equities, commodities, precious metals, they are all priced in USD, and you can park your money into those assets to limit your exposure from your local FX risk. Anyway, this is just what I'm thinking to do for myself. You let me know what you think about that and what is your strategy to protect against any of these risks. And if you like this video, give me a thumbs up and subscribe, and I'll see you in my next video. Are you feeling lost in the complexity of global economy and trying to understand how this is going to impact your investment portfolio? You are not alone, my friend. I have been through and I have learned the hard way, and I'm trying to converge all of my experience and learnings into a course that I just designed specifically for you. In this course, Mastering Macroeconomic Fundamentals for Investment Strategies, I'll show you how to decode the economic trends, navigate market cycles, and build smarter, adaptable investment strategies. You're going to learn, analyze key indicators like GDP, inflation, and yield curves, identify opportunities in commodities and crypto alike, and adjust your portfolio to thrive in any cycle. With real-world examples and actionable insight, this course will empower you to invest with confidence, no matter what the market is. Don't just react to the news. Understand them. Enroll now and take control of your financial future today. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.